channel, stocks and books by Bree, where we talk about buying stocks and dividends dividing and supplemental learning. Want the secret? Gotta read. Here we go over the fundamentals you need to succeed. Major keys, you might get some gems, economic gems. So be sure to go hit subscribe so you can stay linked in.
Hey, what's up, family? My name is Brehon Mills, and I'd like to welcome you guys back to the channel. We love focusing on our own financial and personal development. Listen, family, I hope you guys are having a phenomenal day. Hope you're having a phenomenal start to your week. And I hope you guys had a great Labor Day, all right? Remember, Labor Day is in memory of the labor unions that fought for higher salaries for everyone in this country. So doctors, lawyers, judges, politicians, everyone has higher salaries because you had a group of people that was willing to fight and risk their lives for higher salaries for the working Americans. Okay. All right. So let's not forget. Let's always remember those who fought for higher salaries. All right. Now, family, I want to talk to you guys about Alibaba. Right now, when it comes to placing trades, whether it's call options or swing trades, there are mainly two strategies that I use. I'm going to use either reading and understanding candlestick development, or I may use or jump into a trade based on the movement of the 20-day moving average. Okay. Now, if you've been investing or trading in Alibaba, you know that Alibaba has been on a huge decline, right? So I do invest in Alibaba in the long term. And I think 5%, maybe 4 or 5% of my holdings from retirement is all based on, long-term growth. All right. So when it comes to Alibaba, every week I'm investing and I'm continuously buying shares of Alibaba because I'm thinking about 15, 20 years down the line. All right. Now, Alibaba is a phenomenal company. I'm going to do a deeper breakdown on this. But even though they've been on a long decline, a nice long decline, there has been opportunities where we can jump in based on candlestick development and ride some waves up. All right. So when I take a look at the chart here, right, so we had this huge sell-off starting back in November. All right. And so we have had candlesticks that gives us a signal for reversal and pattern. Right. And so we had this huge fall off here. We had a hammer candle, here. And so remember, I love trading hammer candles. And so once we see the hammer candle, that may represent a reversal and pattern. But the following candle needs to be trading above or higher than that. Now, sometimes I do jump the gun. If I know that the market is closing and a hammer candle is developing, I'll jump in, set my stop limits, and hopefully catch some waves up. And so we've had an opportunity here where back in November where we could have jumped in here at 173 and ride this thing all the way up to, no, not 173. I'm sorry. 258. We could have rode this thing up to 278. And so again, that's a great profit there. And as we see, every time we hit that 20-day moving average, we was met with some resistance and we'll fall back below. All right. And so again, we have another downtrend. We have another hammer candle here. Again, another opportunity that represents a reversal in pattern to the upside. So we had another great day. It closed around 130. The following day, it closed at 136. And so again, sorry about that. Again, we've had opportunities where we can make some money in Alibaba, even during the downtrend. All right. So if you see here, we've always fell below that 20-day moving average and bounced back to the 20, but was always met with some strong resistance. Remember, I use candlestick development and I use the 20-day simple moving average or this 20-period moving average. Okay. And so what I've looked at this week, let me see here. And so I was able to place a trade I believe sometime a week ago I did a video on this. We had a nice hammer candle. The following candle was trading up. I jumped in and I was able to ride this thing up, from 186 to, just over $200. So that's a great gain. And then I sold off. Remember, whenever we jump in these trades, if it's a short trade, if you're unsure about the future of the company, a set stop limits, you want to greatly minimize, greatly reduce your chance of losses. All right. So we had another huge run, another decline. Again, I saw the hammer candle developing. I jumped in and I was able to make a little bit of profit here. We had a nice, great run up. And we sold off a little bit, but we came back up here. So I was able to cash out, make a little bit of money. But now, instead of using or playing off of the hammer candle, now I'm looking at the 20-day moving average, right? So based on history tells us that once we get above that 20-day moving average, we may have a nice bump up. Okay, we may have a nice bump up. And so today, we closed above that 20-day moving average. And so I saw this as an opportunity to jump in, place a call option. And so as of right now, I have a $200 call option expiring on October 1st. Okay, all right, so what we're going to do now is I went in, placed the call option, and I immediately set a stop limit for 10%. So if the value of this option drops by 10%, I automatically sell and I live to fight another day. Okay. And so again, we take a look at the history. We went above the 20-day moving average back on June 23rd. All right. This was a great opportunity to jump in at the close. We had nice pop up. So we had a nice pop up from 214 to 231. So we had a down day there. So I didn't do anything there. And so again, I didn't do anything here. So what I like to do is I like to look for that green bubble, green candle right above the 20-day moving average. So we've been fighting, right? We've been having some ups and downs along the way, but we finally closed again above that 20-day moving average. And so I do have a call option in. I'm going to wait to see how things develop. And remember, no one wins 100% of the time. All right. So if someone you're following is guaranteeing you that you're going to win 100% of the time, you need to unfollow them quickly, because this game is a game of wins and losses. All right. So, but the strategy is, and the long-term goal is, you want to win more money than you lose. All right. So that's the name of the game. And what I've done is I've simply mastered, well, I wouldn't say mastered, but there are just certain strategies, simplistic strategies that I use to succeed in the stock market over and over and over again. And so that is understanding candles, candlestick development, and understanding the movement of the 20-day movement average. Okay, stocks never move too far away from the 20, and so stocks never move too far up. Stocks never move too far down from the 20. They always snap back. It's kind of like a rubber band effect. Okay, and so if you can master just a few strategies, you can ultimately succeed in the stock market. You don't need a whole bunch of indicators, all right? So this Wall Street professional had once stated that the ultimate goal is to, have a 1% positive gain per day, all right? And he could barely do that, because this game is a game of wins and losses. All right. Now you can have, normally sometimes I will have the MACD up. Sometimes I will have the, very rarely I will have the RSI up. But once you begin looking at charts every single day, once you begin understanding candlestick development, it opens up a whole new world. It simplifies your trading and investing, and it puts you in the position where you can win over and over again. All right. Now, family, I hope you guys have enjoyed this video. If you did, man, hit the subscribe button. All right. Hit the like button. Leave a comment. Let me know how you feel. All right. Let me know how you feel, man. We simple and we all about wins and gains over here. All right. All right, family. Remember, set that vision, chase those goals. Remember, set stop losses and keep coming back for more wealth building information. Peace.